Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, we saw mixed performance out of global share markets in the month of August, with US markets performing very strongly, whereas negative returns out of Asia and Europe. What was the reason behind that divergence?
Well, the primary reason for the European and Asian share market weakness is really these concerns about President Trump and his proposals to raise tariffs on imports into the United States. So, for example, if you're a German car manufacturer, if you think about Mercedes, Audi and alike, you'll be concerned if the price of your car when it's exported to the United States will rise. And for German car manufacturers, this is a critical issue. Those exports are worth about 35 billion. So from their perspective, they're going to lose access to these markets potentially. In the case of China, it's a similar story because President Trump has already announced 50 billion in tariffs, and he's also proposing another 200 billion. So the prospect is we have this trade war that is intensifying around the world because of what started by President Trump.
We've also seen a lot of volatility in emerging markets, particularly in Argentina and in Turkey. Are we worried about a contagion effect?
Yes, we are. Not because these countries are absolutely critical to the world economy. They are small economies. But the lessons of the global financial crisis back in 2008 is that even small components of the world economy matter because you have that linkages between them. So in the case of Turkey, Turkey is quite sensitive to Europe, both in terms of economics and finance, as well as politically. So if we look just simply at the financial linkages between Turkey and Europe, what you can see is a lot of European banks have lent money as well as invested in Turkey, and hence they are sensitive to Turkey's fate. In the case of the political story, Turkey is of critical importance to Europe because it's on the border of Syria, and as we've seen concerns about immigration in Europe, that relationship is quite acute between Turkey and Europe itself. In the case of Argentina, that's quite an interesting situation where Argentina is now dealing with very high inflation, high interest rates, but a very large foreign debt burden. And Argentina is sort of like symptomatic of those emerging nations that are probably taking on too much financial risk. And hence we need to be conscious that those concerns can magnify around the world economy.
So what we're seeing in emerging markets, is that one of the reasons for the fall that we've seen in the Australian dollar?
Yes, it is, because what we see with the Australian dollar is a very liquid, accessible currency for investors, and they use it as a proxy for emerging market exposures. So it's a bit of a risk barometer. We are also sensitive because we're a commodity currency, and some of these countries, such as Argentina, are major exporters. And because of that, you know, the linkages between commodity prices and our currencies makes us sensitive to what's happening in emerging markets.
What about in the Australian share market? How's that performed over the month of August?
Well, the Australian share market was surprisingly resilient. It was up about 1% for the month. And what we saw in particular, two sectors strongly outperformed: telecommunications and the IT sector. In particular, telecommunications up about 13% because we had a merger announcement between TPG and Vodafone. Against that, we had some weakness in the materials sector, so they're the resource-related stocks. So they're sensitive to the commodity price downturn that we're seeing.
Thanks for your time, Bob.
Thank you very much, Sinead.
And thank you for joining us. If you'd like further information, it's available on the website where you launched this video.